Guys, this is Leland, bringing you another video on what Bueller likes to call the Lee test. So basically, I just wanted to kind of go over what I look for in what is called the Lee test, which really is technically a reversal that we trade on the smaller time frames, like the 1 minute or the 5 minute, from larger time frame levels. So I just wanted to kind of go over a checklist that I like to kind of check off before entering a trade. And before we go through that, first things first, I want you to grab like a piece of paper and a pen just to write this out with me, or your notepad on your computer. So let's just get right into it. So we're going to say the reversal checklist number one, most important uh, criteria on the checklist is going to be it has to be at a key level. Now, what do I mean by a key level? Um, that could be anything from the BB system levels, like the previous day, open, high, low, close, or 2 day ago, three day ago, open, high, low, close, or like any emerging candles from TA routine, right? So that's number one. Let's kind of get this down here. And then, so we're going to go over the day after this day as an example. So first things first, let's mark some levels, right? We have previous day high, and then 2 day ago high, previous day low, previous day open, and the close is pretty much the same level there, so we don't really have to mark that. And then we can mark the close of this candle slash open of this candle, right? So those are the levels we're going to be looking at. And then the next thing we want to do is go down to our smaller time frames, right? We can start with the 5 minute just to get into this, or let's just go to the 1 minute actually. So the next thing we want to do, I wish I had my checklist on this time frame. Okay, number two on the checklist is we're going to establish our trend, both on like the larger time frame trend as well as the smaller time frame. So establish higher time frame trend, establish lower time frame trend. Okay, so let's go back to our higher time frame. We're in, a bit of a downtrend going into this day, right? We're making lower lows, lower highs. But on the smaller time frame, we're making higher highs and higher lows. So what that's telling us is the larger time frame trend is down, but we're currently trending up on smaller time frames. So what we can look for is potential reversals to the downside to support that bigger trend, overall trend. So next thing we want to do as we're coming into these, key levels that we marked from the bigger time frame is mark our most recent highs, lows, just so we know which level we're going to be looking at for a precision entry for reversal. And then we're going to wait for the following to occur. So I had to cut because of some background noise, but let's just continue where I left off, kind of. So we were saying what we wanted to wait for next after marking the most recent highs and lows. So actually, let's go ahead and mark those. The most recent low on this intraday, like small time frame trend, is right here. So we're just going to mark that. And then we can kind of mark this high as well, which is not really all that important because what we're actually looking for, since we're on a smaller time frame trend up into resistance, we're looking for a reversal to the downside. And what we're going to look for is we're going to wait for the following here. We're going to wait for that most recent low that we marked to form a lower low. And then once that happens, we're not entering on that initial breakout. We're going to actually wait for the low to be retested, or a 50% to 61.8% retracement of the move that broke the low. Okay, so that's what we're waiting for now. Since we've marked the most recent highs and lows, we want to see a break of this low, or possibly like a lower high or whatever. We're just gonna be patient here and wait for this to this setup to form. So I'm just gonna step through. Okay, here we go. So we have another low forming, slight higher low. So this is the new most recent low. So we want to see this low broken. Even better if this one breaks as well. So we can just kind of like highlight this area, right? This is the area we want to see broken, and then retested like that. And we would be entering our puts right here when we see some red or bearish candlesticks forming. So I'm just going to delete these lines and then just kind of play through this, see what happens. Okay, we're getting this low tested here, nothing yet, little wick through, kind of some stop hunts. Okay, still holding. And there we go. So we get a nice, pretty higher volume, rising volume break through that level. So now what we want to see is a new low to form here somewhere, and then price, like we just drew, come up back to this level, reject with some red or bearish candlesticks like a shooting star, bearish engulfing, whatever, to form right here to then bring this to lower prices. So let's keep playing through, getting some slight retracement so we can draw that fib from this high to this low, because this is the move that broke the low we were looking at, right? And we want to see, let's just delete this to make it more clear. Basically, we want to see some bearish candlesticks right here, which would validate our entry. Getting a push higher. There, we're starting to get some red. So now what we can look for, now that this red candle formed, we can look for this tiny low to break or start to break. And that would be our entry. Because again, I only have the 50% marked here, but remember, I'll mark the fib with the golden pocket. So we're kind of sitting right at that golden pocket area for that 50 to 61.8% retracement. So we get another red candlestick. So this candle right here, I would consider a perfect entry for this retest after breaking this low. So we would enter here, right? Come on. I'm going to delete that line. That candle's our entry. And then where is our stop loss? Um, you could have it up here, but preferably I would put a stop loss right here. Keep it tighter. If you see like a green candle hold here and close up like this, it's probably invalidating your trade, and it's gonna continue to hold this low as support and try to push higher. And this is where you would end up ultimately cutting for a small loss since you only entered here. So again, we entered here, that's our stop loss. So we can kind of mark just how good of a risk to reward this is. Since this is our target down here, the previous day high, you're looking at a 7-to-1 risk to reward ratio. And even if you just took it to this most recent low, that's still 2-to-1. That's insanely good. So that's why I love these entries, is because you're pretty much entering where your stop loss is, giving yourself minimal risk for a high probability entry. So let's just see how this played out, because I really don't know. Um, okay, we're already hitting that first target, right? So we've already hit 2-to-1 risk to reward. We could trim like most of our position here or half your position, however you want to do it, and then move your stop loss to break even. So now there's just no risk on the trade at all, right? So there's our new stop loss, which was our entry, break even. And we've taken some profit at this low. And let's just see how it plays out from here. We get a nice fat red gummy bear breaking through that, also breaking through today's open, if you notice. So you could trim more here potentially if you have them, or just keep holding to this primary target we had, which was the previous day low, or previous day high, sorry. So let's just keep going, see how this plays out. Okay, nice push down. It's holding below the open, still holding below. It's pushing up. So another thing I like to look for is the opposite side of what we just went over, right? I'm going to clear some lines just to make it clearer. Like I said, we're looking for a most recent low to break to form a lower low for a short entry, but the same can be said for the opposite side, a most recent high to break, right? Which it's happening here. We're breaking this recent high to form a higher high. So that's telling you that the trend might be going back up to the upside. So now what we can look for is for this high to fail to keep us in our puts, or this high to hold to tell us to, cut the rest of our position for whatever we're sitting at now. We can also watch this low that formed here to reject. So this is our focus is on this area. Or you can draw a fib, but it's the same area, right? So let's see what happens. We get a nice strong seller candle. So this is actually another entry. If you look back at our criteria here, we marked our most recent lows, most recent highs. What do we have here? Well, we have a recent low right here. That recent low broke. And what are we getting? Well, we're getting a retest of that low, as well as a retest of the 50% retracement, which is exactly what we look for in our last criteria, number 4, right? And we've already established one, two, and three, right? We've already hit that key level from the bigger time frames. We've already established this lower time frame trend that was up, which is now shifted down. So this is just confirming for us that the trend is likely going to continue down. So this is another entry to either like scale in or roll into a further out strike or however, or just keep holding the runners that you're already in, etc. Um, so let's see what happens from here, our new entry. And then just like before, pretty much immediately selling off to this first target, which again we can show we're entering here, stop loss above this level. That's a 2-to-1, over 2-to-1 risk to reward, down to the primary target again, to the previous daily high, 4-to-1, which that's just unbeatable in my opinion. So let's see what happens. Are we going to hold this low? Possibly. So we should definitely be trimming here. It's trying to fight. And we're just breaking right through. It's going to fight it. There we go. Pretty much hitting that target almost, what, like a point off on SPX, which is like literally nothing. You can just consider that target acquired, target hit there. But yeah, that's really what I look for with trading this setup is number one, first and foremost, don't ignore this number one. Needs to be a key level from a higher time frame, which again, if we go back, we got these levels from the 2-day ago high as well as the 3-day ago open, which is also the 4-day ago close. So we marked those levels from the higher time frame, went down to the smaller time frames. We established that on the smaller time frame, we're trending slightly up into that bigger time frame level. We marked our most recent low, right? As well as this one. Consider this your recent low that we're looking at. We got a break of that recent low, telling us the smaller time frame trend is shifting from up to down. And then we got our retest of that low, confirming our entry. And then the same thing here. Oops. Another break of a low, retest of that low, down to our high probability, higher time frame target, which was, again, if we go back, it's this green level here, the previous day high. So now that we've basically hit that target, we can just chill, stay cash, wait for potential bullish reversal off of this level, or whatever. We can see if maybe we're going to get a retest of 50% of this entire move. But yeah, that's just mainly what I wanted to go over is this checklist of what to look for with this setup. So, peace, bing bong.